If there was ever a week that felt reminiscent of the Great Recession, it was this past week. I know that many people didn't even know of Signature Bank or Silicon Valley Bank, but they do make up the second and third largest banking failures. And when we couple it with global economic news about Credit Suisse and them needing a banking bailout, I mean, it made me sick to my own stomach. Whenever we start hearing of needing to bail out, we think of what happened during the Great Recession, where there were house values plummeted, there were bankruptcies, short sales, foreclosures, massive unemployment, and a huge need for government intervention to stimulate the economy. Because this is now bringing up headlines again, talking about a recession, I think it's super important to know what to do. Like, how do we stay the course, and do we keep investing our money, or what do we do with it? Because I know that this is bringing up so many emotions. And so we're gonna break that down in today's video. I also wanna talk about some recent housing data with inflation and what it might mean for interest rates moving forward. So if you're new to the channel, my name is Lizy Hoeffer. I am a residential loan officer here in Phoenix. I really like to dig into the economy and teach practical money tips so that you guys can make smart money choices and home purchases. If you are new here, I would love it if you like, comment, and subscribe. And guys, if you are a follower of the channel and you find this information useful, please go ahead and send it on to a friend. So I think a good place to start is really just talking about how recessions impact housing. And there have been about 57 different recessions in our nation's history. Only one of them had a significant negative impact on housing values, and that was the Great Recession. The Great Recession, I mean, housing values plummeted primarily due to horrible mortgage loans and the fact that people own properties that they didn't occupy and that they had very little skin in the game for. And so it just kind of created this like snowball effect of problematic loans and people just dumping their properties for strategy. And so this climate is very, very different from that of 2006 to 2012, primarily because one, we changed mortgage practices. Most homes are occupied, most homes have equity. And honestly, most people that own homes are in a much better housing situation than they would be if they just dumped their properties. And so because there's a lot of talk right now about a recession, I think it's just really important to bring that up, because as we start seeing these banks consolidate, other banks bail out other banks, I think people are naturally just gonna be fearful of what happens to housing values and real estate. So I wanna dig a little bit deeper on what I just said about people being in better housing situations today than if they were to rent a property or find a cheaper property. And that's because 40% of homeowners own their homes free and clear without a mortgage. So that means they're just paying property taxes, homeowners insurance, and HOA if they have it to occupy their properties. You know, of the rest of homeowners, right, that have a mortgage, 85% of them have a rate that's less than 4%. Current mortgage rates, guys, are anywhere between 6.5% to 7.25% given the day. And so at current market rates, even for a cheaper property, they'd be paying a higher housing payment. And rental prices, guys, are still higher than what those mortgage payments are at less than 4%. And so they would have to worsen their monthly expense for housing to dump a property because they thought that the value bottomed out. And so because we find ourselves in a housing market where there's, I think, close to 70% of all the properties owned are owner occupied, and they have low interest rate situations or no mortgage situations, it's just not a climate, right, where people will dump the property. And so this is probably one, because they're in such favorable housing conditions, and we've already started to see this, that there's pressure on inventory. So not enough homes are coming on the market. And so that does create this demand for the housing that's available, even at this higher interest rates, which means that housing values should stay stable or rise at a moderate rate. Now, having said all of that, I do think it's very scary. We've seen a lot of consolidations in the residential lending landscape too. You know, lots of big mortgage companies are being bought out by other mortgage companies. And the fact that these big banks are having to be bailed out and the FDIC is having to increase its insurance, it's scary. It's totally scary. And so it'll be interesting to see what action the Fed takes. There's a lot of people that believe that they're going to continue with their rate hikes, and there are people that believe that they're going to, pull back on their rate hikes. There's some that are kind of in the middle. So instead of a 50 basis point rate hike, maybe just a quarter, and then try to taper the markets with the Fed commentary. So you'll have to tune in later to see what that looks like. We are still, seeing higher inflation month over month, which is a bummer. A lot of that has to do with shelter costs. My personal opinion is that they keep talking about like following up on the data, but a lot of this data is lagging. When they do these surveys to verify what people are paying for rent, realize that people entered into rental situations for 12 to 24 months when rents were at their peak. And so we know that rents started to decline pretty significantly in the summer, so like June on last year. And so it'll take time for that to catch up. And so I know that it will happen. My personal opinion is that we should see some reprieve in shelter costs towards the summer. In addition to that, we should have Q1, sales, which will come out, April, May. And I really do feel like that's when we're going to start to see a shift towards us really being in a recession where inflation isn't this huge concern. Once we start finding ourselves in that snowball, because that's how it goes, guys. It takes a long time for the economy to move in the direction that the Fed wants. They will start their intervention with buying back mortgage-backed securities, bringing down mortgage interest rates, which will hopefully create more inventory and create a more favorable buying market in terms of affordability. So I want to talk about real estate as an investment, especially because in crazy economic times, we don't know where to put our money. But real estate is literally the type of investment that stands the test of time, right? So it is the type of investment that literally doubles every 20 years. And this is including the greatest catastrophic devaluation of property values with the Great Recession. It's also the type of investment that gives us utility of shelter. Most of us don't have access to a rent-free situation. So we would already be paying for housing, and so long as it fits within your budget, you can live your lifestyle, you can pay off debt, you can save, it makes perfect sense to start that appreciation journey today. Now, when you are looking at investments, guys, it is always so important to understand how long you plan on owning it, how does it fit within your budget, but also what are the costs, right, in terms of like what other investments might you not be able to, what sacrifices to your lifestyle. So those are things to definitely consider. But real estate, guys, also has the added, so it has utility, it has appreciation, but eventually it could also cash flow for you. Like you can live in a property and live in one room and rent out all the other rooms. You could turn it into a rental property. And it's very rare that you can do that. Like you can't live in your stocks. You can't rent out a room in your stocks. You can't figure out how to cash flow a lot of different types of investments. And so for me, I have investment criteria, which I call a buy box, which is essential for you to figure out if you're going to be buying real estate or stocks or any other type of investment. And are you investing for growth? And what do you want that growth to look like? Are you investing for time? How long, right? And do you want this to cash flow? Real estate is the type of investment that appreciates, gives you a utility, and guys, it can also cash flow for you if you choose to decide to rent it. This is a relatively safe investment if you can afford it within your budget. So if you cannot safely afford it, if it comes at the cost of being able to save, pay down debt, or your lifestyle in a significant way, don't say yes to buying a property. Figure out other strategies, but this is the one that we know has stood the test of time, isn't reliant on a company's P&L or what will happen with spending, right? It is one that can provide us with a whole lot of stability in an unstable environment. So I hope that this makes sense, because I try to explain this in a way that doesn't make me sound like a super big salesperson, but I really just truly believe in real estate with all of my heart. It's something that I personally invest in, and I've invested in throughout my whole financial history. And I just really feel it's something that I don't want people to be afraid of, because the last time we had a recession, it was catastrophe. It was like real estate Armageddon. Please let me know what questions you guys have in the comments below. Please let me know how I can help you on your real estate journey. If you want to get qualified for a mortgage, my team is happy to help you, and the links will be in the show notes below. Thank you guys. Please send this video on to friends and family that could use this valuable information.